us. I want to get your thoughts on this number first. It looked like CPI for the core came in 0.1%, but month to month came in 0.4%. Kind of limited reaction so far in terms of the indices. What are you seeing there?
Yeah, you summed it up best. You said limited and subdued. So, the 0.4% number was a little bit hotter, but then when you break it down to that core 0.1%, that was a little bit lighter than expected. So all in all, kind of a very, muted number, a number that's right in line with expectations for the most part, and a number that the market overall is going to digest very well. When I say digest very well, meaning, okay, not too hot, not too cold, a continuation of that quote-unquote Goldilocks scenario that we're kind of in right now.
So, Scott, in the last Fed meeting, we heard Jerome Powell mention how they'd be more patient and how they continue to be data dependent. One of the factors they cited allowing them to take this more patient approach was energy prices. They cited how they had declined significantly, but things have changed since that statement was made, and we posted new highs in the crude, the WTI, and the Brent yesterday. We've seen multiple new highs this month and last month in the new 2019 highs. Does crude at these levels force the Fed to reconsider that component in the inflation equation?
Not yet. It's certainly something that they have to keep a close watch on, but I don't think yet. And that's because, for the first time in a long time, you and I have had this discussion many times before. OPEC is actually holding on to these production cuts. Normally they don't. They have really held on to it, especially Saudi. And you know what? Let's see what happens over the next coming months. I know the next OPEC meeting is either June or July here, but that's what's really driving up the prices here. Now, we have not had the time yet to see this increase in price due to these production cuts really have the battle with slowing global demand. That's going to play itself out here, and I certainly think that over the next couple months, we are really going to see a pivot point. So that's why I say I don't think it changes the Fed's direction whatsoever. However, they've got to keep a real close eye on this.
So, Scott, you said a pivot point in terms of global demand. You think an increase in global demand?
No, I'm sorry, I should clarify myself. A pivot point in what's going to happen with the price of crude.
Okay.
Whether these production cuts are really going to sustain the price increases that we've seen, or whether the drop that we've seen in global growth demand really starts to take over and we start to see the prices come back down. Sorry about that. I should have explained that a little bit better.
Yeah, I wanted to make sure I didn't quite understand, but let's talk a little bit about Libya and Venezuela. Talk to us about the impact that we're seeing on crude as the geopolitical scene is starting to heat up some as well.
It actually has a really big input to what's going on here, especially in Venezuela, because we see the continuing sanctions and, the electrical blackout that we've seen has really dropped their production. I think it's down about 70%. So that has really added in. Libya, more a geopolitical risk, I think, than anything else. Yeah, we've seen those production cuts come down quite a bit, but that one still is an outlier to me. It's really Venezuela, it's OPEC, really Saudi Arabia, and you know what? Russia is putting their 2 cents in also, really, sticking with their production cuts, though Putin just came out. I saw a story that came out overnight and said, yeah, we're sticking to it right now, but we're going to keep a close eye on it. We may have to pull back the reins a little bit.
Scott, talk to me, because with the crude so strong, it's actually been in the face of and amidst a very strong dollar as well. For the most part, it's off the 97.66 high for the year, but for the most part, it's holding that mid-96 handle. If it keeps coming off, though, I'd imagine this would only fuel prices, energy prices to the upside.
Yeah, I mean, right now they're all tailwinds here, and at some point, like I said, at some point there's going to be a breaking point. Either the global growth, slowdown is going to start kicking in, or the cutbacks that we've seen are going to continue. They're going to accelerate, and it was just a couple weeks ago, and I have been dead wrong. Let me state, I am dead wrong on this call. It was just a few weeks ago. I said oil 62, that's going to be the top here, because quite frankly, I did not believe in the sustained OPEC cuts. And so far, they're sticking to it. So now we see, West Texas at 64, Brent's well over 70. I'm not calling for 66, 68, 70 in West Texas at all, but there's some major tailwinds behind this here, Ben.
Yeah, you know, Scott, I always say anytime a trader comes on the show and points out when they've been wrong, that's a big part of trading. I mean, it's essential to be able to identify that and move on. Being wrong is part of trading. I mean, it's the cost of doing business for the most part. But real quick, Scott, one more question for you. It's Wednesday. We've got inventories this afternoon. Small build in the API yesterday on the close. Talk to us about the impact that these builds could have. I mean, not only are we hearing about IMF and global forecast growth, which have been lowered again, but yet the price continues to inch higher. This Houston shipping canal issue, I'd imagine this has kind of skewed things in terms of inventory levels because they're having a hard time getting the product out right now. So in theory, some of these builds could be more closely tied to some of the infrastructure issues that we're dealing with.
Yeah, and that's why that number that we're going to see later on today, we really have to dig into that. And like you just said, see how much of that is impacted by, the stalemate or, the problem that they're having down in Houston getting the oil out. So that may be a number that we kind of have to disregard a little bit. But again, this comes back to my point that at some point here in the near future, it's a real coin flip. It's a pivot point. What's going to happen between the cutbacks and the drop in the global growth demand? And I think that's going to come to a head sooner rather than later.